Mark, thanks for being on the show.
Thank you for having me, Jay. Looking forward to it.
So as we're recording this, we are in the midst of one of the most, crazy economic worldwide health issues that I can remember, and maybe ever, at least in modern history in the last 50 or 100 years. And the fallout of this is going to be significant. And so as I read through your bio and realized how much experience you have with credit unions and business lending and loans, I'm really excited to have this conversation because I think it's going to be really tactical. Before we jump into those tactical pieces, which I want to get to, I'd love to hear a little bit about your entrepreneurial journey. What led you to the type of work that you're doing today? And kind of how have you lasted the test of times in business?
Sure. When I was younger, I had a more of a football background, kind of that mindset of go, go, go. And afterwards, after college, I found that I was really good at numbers and number crunching and analyzing businesses and things like that. And I really enjoyed helping businesses and kind of morphed my way into commercial credit. But then I found credit unions. And I always really enjoyed, there was a combination of a few factors. I always enjoyed more community-based financial institutions as opposed to big banks, big corporate Wall Street. That really didn't have much of an interest in me. But I then morphed my way into credit unions, and there was this whole piece of businesses and industries popping up where credit unions were entering commercial lending. And what happened is I started up a credit union shop from scratch. They hired me and said, we don't know what we're doing. And I was there 10 years and built it into my own little business and industry. And then from there, I had a lot of friends in the industry, and they had a company designed to help credit unions and credit union members gain access to commercial financing. And to put it in perspective of where they were, I was the 5th CEO in 5 years. So things weren't going well. So I started up at this company where it was really failing, so to say. I hate to say it, but we had maybe 2-3 people, and we've really kind of built it into this powerhouse of a company where we work with dozens of credit unions all over the place to help people get the financing that they need.
So it's interesting because I think credit unions in general, a lot of people maybe don't know the difference between a typical bank in general and a local credit union. Just for education's sake, can you just provide a little bit of clarity on what is the big difference between something that would be called a credit union and something that is just a bank?
Sure. And a lot of times when you walk in, they have checking accounts and they have car loans, and you can get home equity loans, and they say, oh, this is pretty similar. What really differentiates them is when you lift underneath in terms of the corporate structure. What a credit union is a not-for-profit financial cooperative. It doesn't have stockholders. It's owned and managed by a board of directors, which is elected through the membership of the credit union. And it used to be credit unions had a very tight membership, but that's more the rarity than anything today. Credit unions have generally pretty open memberships where if you're driving by them, there's a pretty good chance you can go in and open up an account. So it's really that corporate philosophy that's different, and the structure. We're not a for-profit corporation, so you can't just merge out your credit unions and sell it to the bigger bank up the street.
Yeah, I know here locally, I do some business with one of our local credit unions in Florida. And I mean, the rates that they have often seem like they're hard for anybody else to beat. Incredible rates on loans. And interestingly, I don't know why, but I think of my credit union more for personal stuff. Like I know I have a car loan with one at a great rate, and might have a few other things going on there, but I don't have any of my commercial stuff there. So were credit unions originally just personal, and they've made that transition over the last decade plus, or what does that look like?
Interestingly enough, the original credit unions, when they were first formed, were just for businesses. Huh. This is going way back in history, and they have morphed into the credit union for the local teachers group or the local factory or the local military base. And what happens really is and 100 million Americans belong to credit unions.
Hmm.
Almost a third of Americans, and people generally like their credit union. And what happened over time was more and more people left their employer and started up their own business, or they had a spouse that had a business. And back in the late 90s, the Congress loosened up the laws a little bit to allow credit unions to get into business lending and commercial finances. And it's really grown since then, to the point where last year there was over $24 billion of commercial loans done through credit unions. And my biggest challenge today isn't telling people that they should consider a credit union, because most people have a pretty good impression of their credit union. Nobody's protesting in the streets against their local credit union, but it's getting them to consider that for that next step for the complete relationship, whether they have a business, whether they have real estate investments, or they're looking to start a business.
So that's really interesting. I never knew any of that with regards to the history of the credit unions. I'd love to dig in a little bit on some real practical stuff, because we don't know what the economy is going to do right now. Well, I think we have a pretty good idea it's not going to be doing very well for at least a short period of time, hopefully a short period of time. And businesses are going to need resources. They're going to need capital. They're going to need something to help bridge the gap, if you will, between whatever's happening right now in the economy and hopefully the turn when it goes and grows again. So, I mean, we're literally right in the middle of this thing right now with not a lot of visibility for the future. Depending on when people listen to this, they may have more visibility. But what are you seeing right now that would maybe be some advice that you would give to business owners and business leaders that they need to be thinking and considering as it relates to cash, investments, and ultimately lending?
Right now, people really need to look and see, are they dealing with a bad event, or is the inherent nature of their business under stress? And I hate to give you a good example, but I'll give you a good example of if you're in the travel business and you focus on being a travel agent for cruises, for the longer term period, you're going to have a stressor to your business. If you have a nice restaurant, cash flow is going to be brutal for a little bit, and I don't know how much people can really help other than waiting it out. But if you have maybe a business to business economy, it's going to be a bump in the road, and I think we're going to be okay overall. Now, if you have those lines of credit established already, now it's you find out what type of documentation you really have, because banks either have discretionary lines of credit where they can call the notes at any time, or they have committed and obligated lines of credit where they're for a set term. If you have a discretionary line of credit, go ahead and pull that down right away so you can have access to that cash. But if they still call the loan, you could have some trouble. Now, if you have a term-based line of credit where you can draw it over a certain period of time, you don't have to rush out and pay interest right away. There's also a lot of great SBA programs out there today. The one piece that I'll say about credit unions is we don't have people rushing to our door to draw down their lines of credit, because during the recession 10, 12 years ago, we really made a commitment. When there's government shutdowns, either at the federal or state level, credit unions are cooperatives here for our members, and it's not in our best interest to just be harsh for people, and we really want to work with people.
Yeah, that makes a lot of sense. So the two different types of line of credits, discretionary and term, when would somebody want to have a discretionary one? When would they want to have a term one? Is there one that's better than the other?
Well, the banks always would rather have a discretionary one. And you would want to have kind of those term loans or obligatory where they're committed to keeping you the line of credit open. So you really want to watch those loan documents now. And sometimes if you see the term payable on demand, that means they could end that term in that line of credit this afternoon.
Mm.
One thing, and I think credit unions are great. There's a lot of good banks out there. Right now we're all in a mode of we want to keep people in business.
Yeah.
So if you're not in operations, then we can't get paid back on our money, and it's not good for the economy for anybody. So we're all in a mode right now of how can we defer payments? We finance hotels. Obviously, not many people are staying at hotels now. We finance restaurants. With very few exceptions for those carry-out type places, restaurants are struggling. So in those cases, we're just deferring payments. The key is understanding your situation and having a path of just waiting it out, or how you can alter the fundamental course of your business in the future, and having those proactive conversations with your lender, with your contact. You don't want to wait 2-3 months from now and then make the phone call when you're 45, 60, 75 days delinquent. You want to do it now where it's a relatively short-term event, and have those conversations on how you can both get through this together.
Yeah, I think that's really good counsel, because I know it would be easy to end up in a situation where you feel really kind of scared and even embarrassed that you maybe don't have the money that you need to take care of the things, even if, the truth is none of us could have done anything about the reality of what's going on. What we could all do is be in a better position as a business as a whole. Do we have good margins to begin with? Do we have good, cash to debt ratios? Do we have all those things in place? That's what we all could have done ahead of time. But now that we're in this situation, the things that you just said there of going, hey, let me proactively make a phone call and say, hey, here's the situation. Because of the current situation with the economy and the virus and all this kind of stuff that's going on, we may not be able to pay this. And so what would that conversation look like? What are the kind of things that is it just that transparent, or is there a better way to approach that call?
It's really having that connection and personal contact to say, here's my cash flow. I'll show you the numbers and be as transparent as possible. And they'll understand that. If you had that conversation 4 months ago, it might have been a little bit tougher because the greater economy is going very well. So as a lender, as a creditor, I can say, well, maybe the problem is you. And it's that business. Now, this isn't like a hurricane or a storm. This affects everybody across the board. So especially, and if you don't have those outlets right now where you have, maybe you've been running on cash and you don't have credit established right now.
Right.
I can tell you it's going to be really tough to establish a hard credit right now. But for those of you who would want to have those conversations, check out a community credit union. We're cooperatives that are here for our members. If you don't have that access, check out that Small Business Administration's disaster relief loans, because right now for businesses that are impacted, they can get very quick turnaround times through the SBA.gov website for states that have declared disasters by their governor. And the interest rate on those right now for small businesses is 3.75%. If you come to me or some to my credit unions, it's probably going to be more. So you can get a real fast answer and a really low interest rate to help people through the time.
Yeah, we had a couple of really bad hurricanes in a row here in Florida several years back, and the first one really hit us pretty hard. And I realized how geographically focused our business was, and it made me want to diversify, but it was too late in the moment. And so the business has always done really well, but in that season, everything was shut down. All we were doing was going out to help people clean up their yards and empty out their businesses, and people's businesses and lives were destroyed in some situations there through those hurricanes. And I actually was able to get one of those SBA disaster recovery loans during that season. And it took a little bit of paperwork and stuff like what you'd expect, but it was great because the terms were incredible, the rate was incredible, and I was able to get a good amount of money to help manage that cash flow and push us through that season where we otherwise had a really bad loss for 2 months in a row, which is very rare for us. But on the whole, for that 12 months, we still ended up with a great year. and that kind of helped bridge that gap until we could get the cash going again. Because a lot of times it's not a matter of, I think one of the false realities that has just, I don't know, kind of been made aware to me is it kind of doesn't matter how good my receivables are. It kind of doesn't matter how good our recurring revenue base is. That's something I really talk a lot about with business owners is like, guys, you got to build up recurring revenue. You got to have good multiple revenue streams, all this kind of stuff. And that is true. But just because I've had this big recurring revenue stream, they could all just stop paying their payments, just like any of the rest of us. So when that happens, we have a real problem. And it seems like that what the government's trying to do, this is the analogy I was using earlier, it's like when an object comes to a complete stop, it's a lot harder to get it rolling again. And it seems like the idea behind government intervention, which is, I know, against some people's feeling until things start getting really crazy, is just to keep the ball rolling. Like if we can just keep the economy just rolling, even if it's not rolling very well, once the virus kind of pushes its way through the system, and we can just get it rolling again. Is that kind of the idea?
The good news is this is not a supply side
Right.
recession like the last time around, where the financial system is actually very well capitalized, and the financial system had very low delinquency going into this. We had a lot of capital, and credit unions have money to lend. That's the good thing is we have that supply of money to go into the market. Now, when you have a hurricane hit Florida and it wipes out an area, that drops demand. Where you have to rebuild, you have to get moving, people have to get back. And much like 9/11, where you couldn't physically do business in
Right.
Manhattan and the demand dropped. In this case, when this passes, the infrastructure is there to get right back on. Now, it's going to take a little bit of time. Those business conferences and the events, it takes time to reschedule and get things moving again. But the infrastructure is there. The demand is there. And the good piece of this is interest rates are rock bottom right now.
Yeah.
So which will really, if you have a rate above 5% on a loan, you're going to be, you should really be looking at refinancing this. And so rates are low. So that's going to spur businesses buying a new vehicle. It's going to spur them moving to a new location. It's going to be able to get them to hire people to get that cash flow going in. Unfortunately, for a lot of people, it's going to feel like that first year in business all over again.
Yeah.
But the good thing is the infrastructure's there.
Yeah, I kind of feel some of that. But I think it's easy to get stuck in like the negativity of it all. But I read something the other day, probably last night. It feels like one day is now multiple days in some of these situations. And it was talking to entrepreneurs, and it kind of said like, this is what you're made. Like this is what you're made for. Like this is your season to shine. Like don't sit in a corner and cry about it. Get up, look around, and see where the opportunity is. Because like I think for me, for example, I've been running the same business for 21 years. We've grown every single year, top and bottom line for 21 years. I know how to run this business. Like it runs really well. This virus is going to shake things up a lot, but it also kind of creates that opportunity to look around and go, hey, what have I been missing here? Wow, a lot of people don't even know how to do telecommuting. A lot of people don't know how to do remote meetings. Like, gosh, what are the opportunities there? What's the opportunities in education? What's the opportunities in online events? And then eventually tying that back into live events once they're able to do them again. And I think that's what I hope people are able to hold on to in all of this is that mentality and being able to push forward. One thing I'd love to touch on, just because I'm curious what your take is, and I don't want to be too controversial, but I'm a big Dave Ramsey fan. I love
big
Dave.
fan myself. So
okay, interesting, good. I love his organization, just really great people. His EntreLeadership Conference, I'm really hoping does not get canceled. We'll see. It's in May. I just love what they do. So I'm curious because he talks a lot about staying out of debt and avoiding, really credit, and to some extent, he brags about the fact they built this new $50 million building in cash and all this stuff. How do you balance that, especially as a Dave fan, with loans, credit, all these kind of things? Like, what's your feeling and thought on all that?
Well, when it comes to personal finances, I am the absolute Dave Ramsey fan.
Got it.
because I think that's a great way to live your life. When it comes to growing a business, I think it makes it extremely more difficult because commercial credit should, personal credit and personal debt cost you money. Commercial credit should make you money and help grow your business.
Mm.
Now, as a lender, we want to see those in balance. We want to, it would be really easy to go buy 100 rental properties, but that's not healthy. So it should your commercial credit should grow your business. It should make you more money after doing it. And it also should be done in a nice, orderly fashion where you still have equity and cash in the business.
Mm-hmm.
So that's actually where I would, and I would have some philosophical disagreements with Dave Ramsey about commercial credit. Because if you think about the world today of all the things that wouldn't happen or couldn't be done without commercial credit, and if you had to wait for businesses stockpiling cash to make the investment, it would really bring that economy exists. It's the Amish in Pennsylvania.
Yeah, it exists in Haiti as well. My wife and I are, have a foundation we're part of down in Haiti, and it's interesting because, I mean, obviously it's an impoverished nation, but even regardless of that, you're not going to go to the bank to take out a loan to build a house. So most houses, they like build the first floor and have like half the second floor done, and they like have half the wall done because they just build it as they have money for it, which is kind of the Dave Ramsey way, actually. But it's interesting because I've had this conflict internally about it in general because, something I would love to talk to Dave about it because I feel like in general, something like a mortgage on my office, for example, in this particular area that I'm in, my mortgage payment is so much lower than what I would pay for rent anywhere else. And I own the property and it's in a great spot. That seems like a no-brainer to me. Like what I'm paying on my mortgage payment is probably half what I would pay for rent in the same place. I could easily rent this place out to somebody else at the end of the day if I wasn't in here anymore. And that seems to make sense to me. That's good debt. But I will say, like, one of the things that I did do last year was I let myself get in a little bit too much short-term debt with the company. Credit cards, not overextending my line of credit, but maybe just, having too much out at an uncomfortable place where I couldn't have replaced it with cash if I needed to. And so we spent all last year getting rid of that. And now I'm in a much better place going into this year because the only debt that I have is long-term debt. I got a wide open line of credit. So we're in a crisis. I have opportunity to use that to kind of protect my cash flow and bridge the gap, from here to there. It's interesting though, because he's, very much that hard line, debt is dumb, cash is king. But, and look, I'd rather have my own cash than debt for sure. But I tend to agree with you on the commercial side. There has to be a place where it can create opportunity to scale and grow. And I'm a super growth guy.
We've seen what happens in the past when there is no commercial credit. It tailspins the world into a recession, and you end up with no cash to be debt free.
Yeah, it's interesting. I was a no debt guy for a long time, and it worked really well for me. And I just grew very slowly, and it worked for my small business. But now, as we start to scale a little bit, there have been times where I've needed to kind of leverage, some credit here or there to help grow with infrastructure, buy equipment, or things like that. And that has definitely helped us scale more quickly. And now we're in a pretty good spot. So we'll see what happens as we get through this.
So one of the things that people need to be careful about is not using short-term debt for short-term needs and using long-term debt for long-term needs. For example, when you're pulling off of these lines of credit now, you want to make sure that there's cash coming in a short-term basis to repay that line of credit. And that's how your line of credit should be utilized. Now, when you get a mortgage and you're financing your commercial property for 20 years, 25 years, that's a long-term investment on a long-term asset that keeps its value. If you don't replenish that, well, that's how businesses end up underwater with a lot of debt where they don't have cash coming in and to repay that.
Yeah, that makes a lot of sense. And I think that's easy to get backwards, easy to think you get a line of credit and take the money out for that and use it for some big thing that you're not going to get immediate cash flow in from. And it's easy to make that mistake. So thanks for clarifying that. So you work with credit unions to help them figure out how to improve their businesses. Is that kind of the root of what you do?
So I'll kind of clarify a little bit, because that's sometimes the most confusing thing, where
Yeah.
I don't understand. My wife even can explain it sometimes. So I'm at a company called MBFS. We are owned by 13 credit unions
Hmm.
and work with over 70 credit unions throughout the country. So, and think about it this way: when all these credit unions started getting into commercial financing, instead of everybody going out and hiring a bunch of underwriters and loan documentation people and buying the systems you need, the credit unions, being cooperative institutions, they work cooperatively to form this company so they could offer commercial financing to their members cheaper, more effectively, without the big investments in overhead and infrastructure, for the betterment of their members and the betterment of the credit union, so they can offer the commercial financing in a little more cost-effective manner.
That makes a lot of sense. So it's kind of systematizing and providing operational, overhead almost that they might otherwise have, and at least giving them strategy and planning and knowing how to do that instead of having to figure it out themselves.
Yep. We also have a network of lenders that are paid for by the credit unions, where we'll have lenders in a region and we'll set you up with the best lender credit union and maybe participate those loans together. And a lot of times, if we don't have somebody in that area, if you connect with us, we'll find a credit union that's lends to businesses in your area and make that introduction at no cost.
Great. That makes a lot of sense. So I want to transition a little bit because I don't want to miss this last topic, which is really important to me. And I talk about it with every single guest. And that's the idea of work-life balance. I don't really even like the term that much, to be completely honest, and it means something totally different to everybody. But I know you've got a couple of teenagers, and you got life that's swirling around outside of just work, and just your own self. How do you take care of your own self? Over time, what does that term work-life balance even mean to you? And how has it changed or morphed through different seasons of life?
Sure. I've really changed now that I have the teenagers and from the younger kids. Before the family and kids, I was going all day, work, work, work.
Yeah.
But now I really want to be there. I've been there for those life events.
Mm.
As an executive, the one thing that I've always insisted on is that if my kids play on a sports team, I'm going to help coach, I'm going to help participate, and I will map my schedule around that. When I plan my travel days, I map out, the daughter's volleyball schedule and work in around that. So I've always made to be there for those events. But also, I think it's more about not just the kids' events, but your spouse, and being there for your spouse, and being there to engage and go for a hike in the mountains and do those types of things, and not living for work, but using work as a way to enjoy your life and be a better person in your community. So I also see it as, for helping your family, for being part of your family, but also from a personal, spiritual standpoint, making sure that you are the person you want to be.
Yeah, absolutely. I really believe all those things. I think they matter, and I like to bring them up on business conversations because it's so easy to get ingrained in all the day-to-day stuff of business. And I think especially for those of us who have children and are married, there's different dynamics to life than just work, and I think that's important to recognize that. And it can be hard to balance it all and figure it all out. But like you said, if you're intentional about it, you put it on your schedule. I had a guy one time, he's like, you want to know what's important to somebody? Just look at their checkbook and their calendar, and I'll tell you what's important to them. And that's kind of it. Maybe it's not checkbook anymore. Maybe it's just bank account, because I haven't written a check in a while. Um, so if we were to kind of wrap things up, and we're thinking about talking to another business owner who wants to build a business that lasts, something that's not going to be just 1 or 2 years, something's going to really build a legacy. They're going to last a decade. What parting advice would you leave for those people today?
I really encourage people to look at the reasons that they get into their business. I look to help finance businesses that people have a passion for and they're committed for, and it makes sense to grow and reach their personal goals on where they want to go. I hate to say making money in the short term and it's easy, but if you want to make money in the short term, yeah, you can do things to do that. But really, if you want to build a career and a legacy and a business in the long run, it has to be something that you believe in. It has to be something you enjoy. And there has to be a reason in the long term for engaging in that business. It has to be to get you where you want to be as a person, your professional goals, and ultimately your financial goals as well. There's nothing wrong with making money.
Right.
So, and we really enjoy helping people go down that journey to get there.
I love it. I think those things are really important. So if people want to find out more about you or the business that you work for, or the credit unions you're with, where should they go online?
Sure. The easiest place is our website, www.mbfs.org. We're also very active on LinkedIn. On LinkedIn, you can search Member Business Financial Services, and myself, Mark Ritter, as well.
Great. I will check it out and share it with other folks, and we're going to get this podcast out as quickly as we can since it's so timely to everybody. Mark, thank you so much for your time, insight, and just experience that you've shared today.
Thank you very much for having me.
Hey, I hope this video has helped you with some tips and ideas to build a business that lasts. Make sure you subscribe to our channel so that you don't miss out on the next videos that we roll out. And more importantly, for some awesome free resources, head over to our website at buildingabusinessthatlasts.com. You can get a free copy of my book there where I tell you how I have built an agency that's grown year over year for the last 20 years in a row. So go grab that, buildingabusinessthatlasts.com, and make sure to subscribe to our channel. Thanks. We'll see you soon.